you've been told the 1% risk rule is the key to safe trading. But what if following that rule is the very reason your small account is designed to fail? I should know that hidden trap is exactly what caused me to blow up my first account back in 2013. I felt worthless, stupid, and for 2 months I fell into a depression. So bad I couldn't even look at a chart. But hitting rock bottom forced me to find the truth. And in this video, I'm going to prove to you that the losses you are taking probably aren't your fault. I'm going to give you the simple 4-step formula I developed from that failure. The pro entry stake calculation. It will reveal the exact capital you need to trade like a professional and not like a gambler. Almost everyone says if you fail at trading, you lack discipline. But what if that's a lie? What if you are following the 1% risk rule perfectly and still losing money? Look, it's not your fault. It's a maths problem that you are never told about. It's a frustrating place to be. You are trying to do the right thing, but you are feeling trapped. That internal dialogue is usually a constant frustrating negotiation that goes like this. Right, I have a $400 account, I'll risk 1%, which is $4. But to do that with my broker's minimum trade size, my stop loss has to be only 4 pips away. That just feels way too tight. Here's the thing. Imagine this. You go to the supermarket to buy eggs. Your budget only allows you to buy 1 single egg. But when you get to the checkout, the cashier tells you they only sell eggs by the dozen. You are forced to buy the whole carton of 12, even though you only wanted to buy 1 egg and could only afford 1. Your 1% rule is your intention to buy 1 egg, but your broker's minimum lot size is the rule that forces you to buy the whole dozen. Now, every broker has a minimum trade size, usually 0.01 lots in Forex, and that minimum size has a fixed dollar value for every pip the market moves. That part is non-negotiable. So if your 1% risk is smaller than the risk that the minimum trade size forces on you, then the 1% rule becomes useless because the broker's rule always wins, and that is the trap. So the real first step in professional trading is not finding a strategy. It's working out the minimum price of admission to trade that strategy correctly. It's having enough capital to afford the whole carton of eggs without breaking your budget. And you can calculate the exact number for yourself. This is what I call the pro entry stake formula. It's a simple 4-step checklist that gives you the exact capital threshold you need to trade professionally. Step 1. Determine your pro stop loss in pips. This is not just a random number. It is based on market volatility. A simple way is to use the 10-day average true range or the ATR indicator that is found on your daily chart. For this example, let's say the ATR for the pound against the dollar is 80 pips. That's our number. Step 2, find the minimum pip value. For your broker's smallest trade size, that 0.01 lots, find out what each pip is worth. For most Forex pairs, it's about 10 cents per pip in dollars. But this changes depending on the market and the asset class you want to trade. Step 3, calculate your minimum dollar risk. This is simple maths. You multiply your pro stop loss in pips from step 1 by your minimum pip value from step 2. So 80 pips times 10 cents gives you $8. This is your unavoidable rock bottom minimum dollar risk per trade. You cannot risk less than this on that market with this broker. And step 4, calculate your threshold. Now that you know your minimum dollar risk is $8, you multiply that by 100 to find out the exact account size needed to make that $8 equal to 1%. $8 times 100 is $800. And that right there, that number is your pro entry stake. With a single dollar less than $800, it is mathematically impossible to follow the 1% rule on that particular example market. Now that you know your capital threshold, have you ever wondered what other hidden reasons are causing losses even when you do have enough capital? Instead of guessing, I created a completely new way to find out the root cause. It's a free quiz called Why Am I Still Losing Money Trading? Even if you think capital is your only issue, this quick 3-minute diagnosis will pinpoint your specific weakness. Click the link below right now or the one on my profile page to find out if the real reason you are losing money is the one you least expect. Now that you have the formula to calculate the price of admission, you are probably wondering why this number is so critical and how your small account has been secretly forcing you into a massive gamble. The answer lies in a piece of simple math your broker likely hopes you never find. So you have your number. For example, it's $800. Any account smaller than that is in the danger zone. Let's break down exactly why by looking at the story of how I blew up my first account, a mistake I see nearly every new trader make. When I blew up my first account, what I didn't realize was that my failure had absolutely nothing to do with my entries. I had focused so hard on being right, and that I never did the math on what happened when I was wrong. My tiny account was forcing me into taking massive risks on every single trade without me even knowing it. This is what I call the risk multiplier effect. The smaller your account, the more the broker's minimum trade size multiplies your actual risk. Now, the common but wrong solution, and I know because I tried it, is that you start thinking, right, if my dollar risk is too high with an 80 pip stop loss, I'll just force it down with a 10 pip stop loss. That will fix it. This is like trying to win a boxing match by standing right next to a professional with a longer reach. You are inside their noise range, where every small jab and random movement is guaranteed to hit you. You get knocked out by random market noise before the real trend has a chance to move. So let me show you the maths that was really going on behind the scenes. This is the moment that changes everything. Let's imagine two traders. Trader A has a $5,000 account. Trader B has a $50 account. Both want to risk 1%. Both are trading the pound against the dollar, and they both use 80 pip stop loss based on volatility, and both still use the broker's absolute minimum trade size of 0.01 lots. For trader A, with a $5,000 account, that 80 pip stop loss results in an $8 loss if it gets hit. $8 on a $5,000 account is a 0.1% risk. It is well under his 1% goal. It's professional and it's perfectly manageable. Now look at trader B with a $50 account. He uses the exact same 80 pip stop loss, the exact same minimum trade size of 0.01 lots. If his stop loss gets hit, he also loses $8. But what is $8 on a $50 account? It's a catastrophic 16% risk. He was gambling, and he didn't even know it. He intended to risk 1%, but the maths forced him to risk 16 times more. Think about that. 1 or 2 normal, predictable losses, and his account is crippled. And that's the trap. Your discipline was never the problem. The math was. You are set up to fail from the very start. So we've proved the math is rigged against small accounts. But this is not just a numbers problem. It's a psychological one. And understanding this is the key to breaking free from the single biggest illusion that keeps struggling traders stuck. You think you are in control of your risk, but you are not. This then leads to that cycle of fear, hope, and frustration that feels like a discipline problem, but is actually a capital problem. The best traders are not fearless. They just have enough capital to make the fear manageable. They have enough capital so that no single trade can scare them, no single trade can hurt them, and no single trade can knock them out of the game. That's the complete opposite of what happens on a small trading account because of what I call the broker's risk floor, that minimum lot size. Every single trade becomes a major threat to your account survival. So this creates what I call the capital-fueled fear cycle. A 16% loss feels devastating, so you get scared and you skip the next valid trade. Of course, that's the one that works. Now you feel regret and jump into the next trade that isn't even a real setup, trying to make up for it. You think you have a discipline problem, but you don't. You have a maths problem. The maths of your small account is what's creating the emotional chaos. When you fix the maths, you finally give your discipline a real fighting chance to work. And this brings us to the most important mindset shift that you can make right now. The goal for a trader starting with a small account is not to make money. It's to save enough money to be able to follow the rules of making money. You have to find your rules before you can follow them. Now, this is how you break the cycle. It's a simple 4-step plan to put you back in control. I call it the capital accumulation plan. So step 1, calculate your capital threshold. Use the formula. Get your exact number. That is now your mission. Step 2, become a business builder. Your job is not a trader anymore. You are the founder of a trading business, and your only goal is securing startup capital for your trading. Save aggressively. This changes everything from pressure to purpose. Step 3, practice with purpose. While you are saving, you're not just waiting. Open a demo account, and your only goal is to master the flawless execution of your strategy. Forget the virtual profits. Focus on only a perfect process. Journal every trade, build the habits of a professional so that you are ready. And finally, step 4, deploy when ready. Only after you have both the capital from step 2 and the proven process from step 3 do you go live. You enter the market not with hope, but with a professional foundation. This is how you stop gambling and start building a real trading business. Now that you know the exact capital you need to trade like a professional, that's only the first pillar of success. All the capital in the world is useless without a proven step-by-step process to execute, especially when you only have a few minutes a day. So check out this video where I walk you through the exact part-time trading checklist that took me from inconsistent results to professional discipline. See you in that video.